And I'm sure that whenever you go to 36, the price chart guys are going to say, well, I guess we were wrong. It's not a top. That's a triple top breakout. 235 peaks, so you go to 36. The point and figure guys will get all excited. I think it's going to happen. I think this rally is for real. You add $1 to about where today's high is, and it is for real. We're going to surge. And that's a net price acceleration sign for silver, which I bet will correspond to a relative performance shift by silver as well.
Gold price slides as USD regains confidence post-NFP. Gold prices are extending losses against the US dollar on Friday, falling below prior psychological support, now resistance, at 3,350 after the US non-farm payrolls report showed a resilient labor market. After a week of data suggesting a softening U.S. labor market, the non-farm payrolls report for May surprised to the upside. The U.S. economy added 139,000 new jobs, beating analysts' expectations of a 130,000 increase. Meanwhile, the unemployment rate remained unchanged at 4.2%, offering a mixed but slightly more optimistic view of labor market conditions. The stronger than expected headline figure has provided temporary relief for the U.S. dollar, easing concerns that the Federal Reserve may need to act quickly with rate cuts. However, underlying softness in other employment metrics earlier in the week continues to warrant caution in the broader policy outlook. According to the CME FedWatch tool, the probability of a July rate cut has dropped sharply to 16.5%, down from 33.9% prior to the release. The data has temporarily eased pressure on the Fed to act swiftly, suggesting that policymakers may adopt a more patient stance in the near term. Although Thursday's phone call between Chinese and U.S. presidents helped ease immediate fears of an escalating trade war, tariff uncertainties and broader trade tensions remain a key concern for global investors. The U.S. decision to double tariffs on steel and aluminum imports to 50%, which was enforced on Wednesday, has drawn sharp criticism from key trade partners, including India, Canada, the European Union, and Mexico, all of whom have threatened retaliatory measures. With trade negotiations expected to continue into next week, the risk of prolonged disputes looms. Should talks break down or tensions escalate further, the global economy could face renewed headwinds, potentially weakening equity markets and driving demand for safe haven assets such as gold. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time, so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
But anyway, we look at momentum of price and we measure it, like, for example, quarterly momentum, which is a fairly long-term measure of the market, where we don't measure day-to-day action. We measure like monthly bars and how are they plotted in their relationship to the ongoing three-quarter moving average. It was clear you were topping late last year. And if you look at price charts of the S&P, you'll see it was just clumping up there. You know, it was just doodling around, staying firm, but it wasn't going anywhere. And in January, the very first week of the year, we had enough breakage in the S&P on our momentum charts to say, okay, that's it. Okay. Well, 2 weeks later, the market made a new high by a couple percent above where we said sell, which is okay. We don't mind being wrong a bit. And it went up, made a new high, and nothing happened. And it rolled back over and started to slowly degrade. January, February. And it wasn't until April that they really got clobbered with the tariff stuff. Okay. But momentum had already blown all of its major multi-year trend-defining structures that it had been building since that 2022 low, the market made a low then and advanced for a couple years. Took it about a year and a half just to get back to its 2022 high. But anyway, and it finally, in 2024, you exceeded the old high that occurred in 2022. And you rolled over there. And when you rolled over slightly in price, we blew momentum structures. It's like looking at the bridge on the River Kwai. Okay. Boom. Okay. Price didn't have those structures. But then what happened? A bit lag to momentum, like a month or so, we had the implosion. Well, MSA knows that you don't have a trend that goes from A to Z or Z to A. It has counter trend moves. And we predicted before that April drop, the bounce place, a place for a good bounce, would be 4,800 S&P. It stopped at 4,835. And for the NASDAQ 100, which is the sort of the leader index, but it's moving with the S&P in terms of technicals, around 16,500. Well, there were some momentum reasons for that, but also if you're an idiot with a crayon, you can go back to the 2022 price high in the S&P and draw a horizontal line, 4,800 area. It was the peak then in January 2022 was like 48, just above 4,800. So what did we do? We fell back to that high and they said, oh, let's buy it here. Okay. NASDAQ 100, the same story. It peaked in November of 2021, a couple months before S&P, and it was mid 16,000s. Well, where did we stop? 16,500, right on top of the old high. And we got a good bounce. And then when Trump waved the wand again, what caused that first bounce? Do you remember that 2 days off the low, we exploded? It was the biggest up day in history almost. That's because Trump said, 90-day pause. And everybody said, oh boy, party on. You had this big move, and then you spent the rest of the month of April just fiddling around, mostly below that high. And then finally in May, you exceeded that high and went on up further. Now, when you look at the momentum chart that I sent you, you'll see the price chart back up near its high. But when you look at the momentum chart, you see a different picture. You see something that is back up toward the levels where we had rendered the breakage of the momentum. In other words, the trend line structures, the flat floor structures on momentum. And you've gone up to that level, and all of last week you stalled there. So that chart I sent you is as of last week close. Since then, we're down 1% or so, no big deal. But we're stalling on momentum around where the point of breakage was for momentum, the oscillator level. So we'll see whether it rolls over here. I suspect it will. I think the damage done already in January, February, and March on momentum is valid and is likely to lead to a sustained decline with counter trend rallies. And we just saw one hell of a counter trend rally. But that's what I think it is. That's how we assess it.
In today's news recap, silver jumps to highest level in 13 years following gold's 2025 rally. The price of silver moved sharply higher Thursday morning and hit its highest level in more than a decade. Silver futures rose as high as $36.27 per troy ounce on Thursday, notching the highest price for the metal since early 2012. Silver futures were last up more than 3% on the day at $35.81 per troy ounce. Silver has been a high-performing asset in 2025 and is now up more than 20% year to date. That is still lagging the move in gold, however, which has jumped about 28%. The price of gold was down slightly on Thursday, meaning silver's rally closed some of the gap between the two. Silver has industrial uses, including in solar panels, and is also seen by some investors as a defensive precious metal similar to gold. A recent survey from the Silver Institute estimated that the supply of silver was about 15% lower than demand in 2024 and projected another deficit in 2025. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics Handbook. Most stackers want to get active, but swapping their metals barrels for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
It's very low for silver in relation to gold. Everybody knows that. Okay. When we technically analyze whether there's the potential to go back up to that, even just the normal 2%. It's not even asking a lot. You're asking for routine recovery to a normal level. Well, that's a doubling in the current valuation of silver to gold. Are there technicals that indicate to us that spread, analyzing the spread technically, is ready for an upturn and a surge? And we see them. We've not broken through them yet. Right now, silver, like I said, is 1.01. Divide an ounce into as of today, as we're talking. Okay. If you get up to 1.1%, the price of gold, so move up 0.1%. Okay. That spread is going to break out on our work over a first level of breakout. And if you ever clear 1.32%, you can make a note of this if you want, 1.32. I think you'll gush up to 2%, meaning just go to the norm. Well, heck, that process involves the doubling of current valuation of silver to gold. Now, whenever silver outperforms gold, it's never in a downtrend on both markets. In other words, when silver outperforms gold, it's because it's going up more than gold. It's never the case that silver outperforms gold because gold goes down more. You know what I mean? So the spread breaking out to the upside is also affirming net price upside in both markets. And I think we're on the cusp of that. And I also sent you a chart of the gold and silver miners versus gold. And that is a very clear spread chart. It goes back to 2020. And why did I go back there? Well, if you'll recall, that surge that occurred from late 2019 to 2020 was not only a price surge for all the metals and the miners, but it was a relative performance surge by the miners where miners beat the pants off gold during that 6 or so months of that surge into mid-2020. Well, if you go to the peak of that rally, which is what this spread chart shows, you'll see it's a staircasing decline in the relative performance of the gold miners versus gold. There's a structure on that chart. If you treated it as a price chart, which in effect it is, it's price versus price. There's a downtrend structure and there's a horizontal structure such that right now you're nudging up toward that level. In fact, that chart is as of last week's close. You're stronger than what that chart shows. You're not at the breakout level, but that breakout level is so well definable that when you break through it, expect miners to gush on the upside. Not just in price, but in relative to the gold market, which they often do in bull trends, particularly later in bull trends. So we see both silver and the miners, which have been underperforming gold for the last several years in particular, since that 2020, 2021 period. They look ripe to turn up versus gold. And then there's a net price issue on silver too. And you mentioned that. I had a long-term oscillator that I showed. It's a 40-week average oscillator. And what is that? That means each week we take the weekly range and we plot it on an oscillator versus where is the 40-week average. 40-week average is about like a 3/4 average. It's about the same duration as a 200-day average. So it's a long-term average. And we want to know where is this week's range in its relationship to that average. Is it above it or below it? In which case we plot the oscillator. That oscillator has a parallel channel on it that goes back to last May. And if you close this week out, and right now as we're talking, silver's been up to upper 33s. You get to the upper 34s, like 34.90 area again. Remember, it's peaked twice above 35, October of last year and March of this year. You get back up to the high 34s again, that spread's going to, not the spread, that momentum chart's going to break out. Meaning momentum says, I'm going for it. Meaning go for what? A triple top breakout in price. And I'm sure that whenever you go to 36, the price chart guys are going to say, well, I guess we were wrong. It's not a top. That's a triple top breakout. 235 peaks, you go to 36. The point and figure guys will get all excited. I think it's going to happen. I think this rally is for real. You add $1 to about where today's high is, and it is for real. We're going to surge. And that's a net price acceleration sign for silver, which I bet will correspond to a relative performance shift by silver as well.
What do you think of Michael's take? Do you agree with him? Will gold and silver blow up and shock the world, especially taking into account that now gold and silver will be legal tender in Florida? Will this be the ultimate catalyst? Gold and silver stackers need to see their stack be worth a gazillion worthless dollars. Post in the comments section down below your honest opinion and share this video with a stacker. Now check this video right here because you'll love it. I'll see you on the other side.